Now, we live in a constant fear of an economic downturn, and most people are currently struggling just to hold on as it is. And with the conflicting talks about if we're even in a recession, it's more important now than ever for people to be prepared. So first things first, let's understand what a recession is. Now, officially, a recession is whenever a country has a negative GDP for 6 or more consecutive months. And to simplify this is when a company were to operate negative, meaning it's actually losing money each month. Officially, the last one we actually had was back in 2008. And even though things have been shaky like in 2020, we technically haven't had one since. But we may not be far from one, because in 2020, quantitative easing because of COVID was helping inflate the economy. And this means the cost of borrowing was at an all-time low, meaning you can get a house, a car loan, all of the interest rates were practically zero. And this caused a massive amount of new money to enter the economy. But what happens when all of that changes? See, soon we might likely experience something called the bullwhip effect. Something that we did previously might come back to haunt us. And this can be in the form of delayed supply chain issues, job layoffs, inflation, and this is just to name a few. So it's no surprise with all of these issues and the lack of rising incomes that people are living paycheck to paycheck. So in the event of a recession, what can the average person do to weather the storm? Well, the first and foremost thing that you could do is pay down any debt before it actually becomes a problem. See, having debt in a time where things cost more and you can't even afford to live is only going to make matters worse. See, recessions can hit hard, so having the least amount of financial burden before anything happens is going to be a necessity, especially when you're paying interest on money that you already don't have. See, debt is one of those slow killers, and it's already at an all-time high. The consumer debt is already nearing $20 trillion, and one factor that's leading the rest is credit cards. And with people relying more and more on debt, it's already an unstable house of cards. See, the less negative debt you have, the better. See, I don't agree with Dave Ramsey on everything, but if you have credit cards and you're unable to make your monthly payments, meaning you're purposely paying interest, it's time to cut them up. But with debt, the best advice you can get is one from a certified financial planner. And you can reach out to a local CFP with a link down in the description. And what this will do is just help you with your overall financial planning. And if you don't have the funds for a CFP, just go to the YouTube channel Pocket Watching with JT. He's a certified financial planner, and he even made a debt-free course. Now, the next thing you need to do is identify what you currently have. This means your budget, your financial plan. You need to calculate your net worth. You need to understand what your credit score, everything. You'd be surprised with the lack of reviewing that we personally do. I mean, just take our paychecks for an example. Most people don't even look at them. More than 50% of US workers have had mistakes with their paychecks and they didn't even know it. Your paychecks are your main monthly source of income, so it's important for you to review your statements and ensure the numbers are correct. Don't just brush it aside. It's important for you to review your statement at least quarterly. And here's a quick list of things for you to just make sure that you look over. And you don't have to overcomplicate these. All you have to do is take a simple glance and make sure that you understand what your current stance is. The first stage is just having a rough estimate of what your picture is. You don't need to have a final draft yet. For your paycheck, like I said, make sure you know how to access it, and at least once a month or even quarterly, take a look at your hours, your taxes, and your benefits just to make sure and see if anything's right. For your budget, you don't have to have a super detailed breakdown, and I've even made a video going into detail if you want to look at that. But for this stage, just get started with a sticky note, and on one side, make sure you write in, and on the other side, write out. And at the end of each month, what you're going to do is write how much money you made and how much money you spent. And what this is going to do is give you understanding what your monthly outlooks are. You don't need to do a super advanced detailed breakdown of your budget. All you need to do is understand if you're red or green. And for your net worth, all you're going to do is calculate your assets minus your liabilities. And this number is just going to give us an overall outlook on where we're currently standing. The last one you need to take a look at is your credit score. Your credit score in the eyes of a bank is simply just to detail your overall credit worthiness. An easy way to check this is most banks actually offer this service for you to review your own credit at least once a month. Now let's talk about investing during a recession. And this is things like real estate or even in the stock market. See, it can be extremely volatile during a recession and just overall times of uncertainty. But panicking is the last thing you want to do. And if your investments are solid, you can hold them for the long term. And statistically, that's often the best choice. But make sure you're informed on all of your investments. This means understanding if you want to sell, hold, or even buy new assets. Because in this moment, timing is everything. Take the stock market as an example, the area Warren Buffett knows very well. He says, be fearful when others are greedy and greedy when others are fearful. See, just because things are bad doesn't mean that there's not a good opportunity. And overall time in the market is going to be timing the market. See, even though in 2008, companies like Google and Apple and the market as a whole was just overall down. And see, if you as an investor were to buy in at these times and were to hold for the long term over the decades, well then you would have doubled your money. And don't even get me started about the housing market. See, while times of the average house worth has nearly doubled, so if you were financially solid and diversified your investments during this time and you were able to afford a house, well then you'd be well off by now. And as a current example, we saw the worst case scenario in 2020. And if you were to just take a simple look at the charts, we just overall bounced back within a few months. See, the economy at its worst is some of the best time to invest, but the only way to maximize this is if you're prepared. And an easy way to track what's happening is just track the large investors. See, there's sites like Dataroma which allow you to see what the large hedge funds are buying. But even in the down markets, there's one thing that you always notice: they're always buying. So in this case, make sure you always follow the money. Now, before I get into this next one, if you're getting any value from this, don't forget to like and subscribe to the channel. I'm on the road to 1K and it'd be greatly appreciated. Now, this next point is try to be employed in a safe company or industry. And I never see this talked about in the other YouTube videos, but your main source of income is your main risk factor, especially if the economy is at risk. Take 2020 as an example. Everyone panicked, shutting everything down, and everyone quickly realized the important things like logistics, IT, medical, just to name a few. And if you need help finding some sectors to start getting employed in without a degree, I made a video about that, so check that out. But just because you're in a good job doesn't mean it's safe. The company you work for matters, so make sure you look around to see if the company's in trouble. This means understanding the clients that the company relies on, and even understanding if the company's doing things like hiring freezes. This can give you hints on the kind of funding that the company gets, or in the event that there's no payroll to hire new employees. And I'm saying to look at these kind of things because most people aren't in the closed room meetings to talk about things like cash flow. But if your company is already barely staying afloat, it's time to get your resume ready. See, a company saves money primarily in two ways: operating expenses and payroll. So this either means to shut down stores, products, or services, or just to lay off employees. See, in times of great economic output, we see companies scale up fast, and we saw this in 2020, and this comes in the form of more products and more people. But in the event any of that money stops coming in, layoffs happen. I'm not talking about those random cases with new management like Twitter or X or whatever its name is, where 80% of the staff was fired. And there are even trackers that show layoffs like layoffs.fyi, which is in the overall tech sector, and it shows that in 2023 alone, over 270,000 people were laid off, and this is just in one sector. So for our main risk asset, which is our income, make sure that you're prepared and have your overall resume, your LinkedIn profile, and your connections ready. Now, for this last one, it's unfortunate that I even have to say it, but don't fall for scams. See, when money dries up and everyone feels a squeeze, these scams come out of the woodwork. See, when a recession hits and everyone feels the squeeze, these schemes come from everywhere. It's often some form of fast money tempting you with quick and easy wealth. And let's be honest, when times are rough, instant financial relief can seem like a breath of fresh air. But here's the harsh reality. Scammers take advantage of fear and uncertainty in most people, offering tempting shortcuts and fast returns of investment. And almost every time this ends up in some form of financial disaster, with the people at the bottom hurting the most. If you need any examples, just look at CoffeeZilla's channel. These are just examples of frauds that happen all the time, day after day. And these cases often happen every time on repeat. But if you know the signs, it's harder to be tricked. And scams like these just end up drying up or collapsing when the money stops coming in. So even though things might be good at first, it doesn't always stay that way. Especially with this new social media economy with more global reach, scammers have been evolving just to become more sophisticated in all of their approaches. And it often comes with flashing or faking an online lifestyle. So remember the saying, if it sounds too good to be true, then it probably is. So you need to make sure that you always do your own research before any investments. And if you need any help with any other money tips, check out this video and let me know down in the comments what topic you want me to talk about next.